The extreme trading strategy has 3 steps. I'll go over step number 1 in this video. Step number 1, wait for the price to reach a statistically extreme low. Let's look at some examples. This is a price chart for XRP against the US dollar. And the trading exchange is Coinbase. So all these prices are coming from Coinbase. You can see that a while ago, the price rallied, and now it's in this long period of consolidation. And this is the daily chart. So one candle represents price fluctuations over the period of one day. Notice how when the price retraced to either the green line or the pink line, that it bounced off each time. Did it a few times in this area here. The black dotted line represents the average price over the previous 20 days, so the previous 20 candles. So this dot in here is the average price over the previous 20 candles. This dot in here is the average price over its previous 20 candles. It's a moving average. The green line represents 2 standard deviations away from the average. So the lower line is minus 2 standard deviations below average, and the upper green line is plus 2 standard deviations above average. The green lines will capture 95% of all trading activity. The pink lines are 3 standard deviations away from average. So minus 3 and plus 3. 3 standard deviations captures 99.7% of all trading activity. And if you look at the candles, you can see that almost all of the trading activity is contained within the pink lines. So whenever the price hits the pink line, this is a very extreme, in this case, low. This is an extreme low, hitting minus 3 standard deviations. When the price rallied up, you can see it hits the pink line. This is an extreme high, plus 3 standard deviations, and that's why it corrected off of there. It's hitting extreme prices and then bouncing away. So the green line represents extreme prices, the pink one, very extreme prices. These indicators are Bollinger Bands, and they're available on probably all charting packages. I'm using TradingView for this demonstration. And I'm just using the standard settings. So you can see up here 20 periods and 3 standard deviations. The close, 3 standard deviations. That's the calculation for the pink one. And for the green one, it's going to be the close of 2 standard deviations and also 20 periods, or 20 days, 20 candles. Now you can see that there are times when the price can come down to the pink line and keep going. I mean, this might be hitting minus 5, minus 6 standard deviations, a very extreme low price. Yet the price keeps falling. And this is because there's a lot of fear in the market. So it hit its ultimate high back here, and then some fear entered the market, and it just keeps driving it down. And this is why you need step number 2 in the strategy, which is to confirm that the price is actually going to reverse. Because this is a reversal strategy. The price is dropping, it hits an extreme low, and then reverses and goes up. I'm not going to discuss step number 2 in this video. I'll leave it for another. Now notice that when the price did drive up to its ultimate high, again, it hit 3 standard deviations here, and then the next day went up and hit that as well. So step number 2 would have been necessary to confirm that the price was actually reversing and coming down. But in this video, I want to emphasize how market prices oscillate between extremes. You can see here 3 standard deviations high, 3 low, 2 low, drives up to 3 high, down to 3 low, 3 low, 2 high. It just keeps bouncing back and forth between these extremes. In another video, I'll show how to set up this chart. This is a free charting package through TradingView. It allows you to have 2 indicators and 1 time frame. They have paid packages for multiple time frames and a lot of additional indicators, but this is sufficient to follow along and get familiar with the extreme trading strategy. I like cryptocurrencies because they're probably the most volatile trading instrument right now. They have the wildest swings, which is great for a strategy like this. Like when this retraced after this big move upward, it retraces down to -3 standard deviations and then bounces off and moves up. If step number 2 confirmed that it was actually reversing, which probably would have occurred somewhere in here, what sort of gain would this move be? Going from 2 standard deviations up to 3. Well, from $2.17 to $3.15 is about a 45% gain in about 15 trading days. Any of these moves from extreme low to extreme high, these are very significant moves in a short period of time. That was 3 days. Now, since cryptocurrencies are so volatile, I'm much more likely to take trades off of 3 standard deviations on larger time frames. Probably the smallest time frame I will look at will be an 8-hour. Now, since this is a free trading package, the 8-hour interval is not available on this, but you've got the larger time frames, day, week, and month, and up to 4 hours. But again, I would typically only use this for tech stocks. For cryptocurrencies, I want to see extremes hit off of an 8-hour or larger. Let's look at a tech stock. Here's NVIDIA. It's the daily chart. This is one of the more volatile stocks out there. You can see how the price oscillates back and forth between these extremes. It's -3 standard deviations, and this starts a very strong trend. It ends up here at 2, bounces off, 2 again, and then starts to trend down. Here it hits 3, goes to 2. I'm not going to talk about targets in this video. I'll leave that for another one, but I will say that in the back of my mind, when I see an extreme low at -3, my initial target is the opposite green band, so the opposite 2 standard deviations. -3 goes to +2. So it's like I'm subtracting 1 standard deviation as my initial target. Sometimes you get more. You can see how it's hitting 2 here, and it goes up to 3. There's a way to tell you, whether or not there's more move left in the tank, which I'll leave for another video. But you can clearly see that these pink bands, 3 standard deviations above and below the average price, it's containing almost 100% of all of the trading activity. And that's why the price tends to bounce off of it. And it's the bounce off of these Bollinger Bands that you want to capitalize on. So I want to buy at an extreme low, and I want to sell at an extreme high. I want to buy cheap and sell expensive. That's how businesses make money. I want to encourage you to follow my X account, which is @TradeExtremes, because I will mention things in here that I might not mention in a video. These are some of my random thoughts that are maybe too small to put into an entire video, but there's some important information here. For example, I mentioned that I never trade the news. I focus solely on price action because I've noticed that these extreme price levels always come before major news events, before news is released. The catalyst is the extreme price, and the news just adds fuel to the fire. It creates emotion in the market, and that's what helps drive the price away from the extreme point. You know, NVIDIA hits an extreme low here, and it needs to reverse. This is unsustainably low. There are no sellers left here. Buyers take control and start pushing it up. Now, what you'll find typically is there'll be good news somewhere in here, not down here, because the big accounts will have already entered their positions to buy. That pushes the market up a little bit, and then all the emotion, like the really big candles, those are emotion candles, and you'll often find news in there. So this is when the smart money gets in, and this is when everyone who follows the news gets in. And sometimes it's too late. Sometimes they get in, they'll buy right up here, where there's going to be lots of hype. And the news here, the news always helps the smart money. It never helps the people who are actually trading off of the news. Because what do you expect to hear when you see NVIDIA drive down here? This is all going to be bad news. But this is the best place to buy. You're buying when the news is bad. So if you're listening to the bad news, you're going to make a wrong trade. And what do you think the news is up here? It's going to be good news because the price is rallying. But do you want to buy high? No. So you don't want to listen to good news here. It should be the exact opposite. That's what I'm saying here. Novices might enter trades at extreme prices too, but it's always in the wrong direction. Novices are not independent thinkers. They're followers. They buy at highs and they sell at lows because of FOMO, because of hype, because of their limited market knowledge, because they act off of emotion and impulse. And it inevitably leads to poor outcomes, losses. So do follow this X feed here. I will often put, this is a new account, so is my YouTube account. I'll notify when I release videos on here. And in the future, I'm expecting to address particular markets because I'm expecting comments and feedback and maybe requests to look at specific markets. And if it's a small comment, I'll put it in on X. And if it seems like it's a sizable topic, I'll make a video about it and post it on YouTube. The last thing I'll say is this is the beginning of a passion project for me. I'm not looking to make any money off of it. I'm looking to help people. And I've just seen some people struggle to make money from markets because they're really doing the opposite to what they should be doing. They're doing the opposite to what they do in their daily life. Like when you go and buy a house, do you want to buy it above market price or below market price? I mean, it's obvious. You want to buy a house that you like for the best price possible. So why would it be any different if you're trading XRP? There should be no difference. It is just a market. Imagine this is just the prices of a house that you want to buy over time. You don't want to buy that house when the price is up here. You want to buy it when it's down here or here. Buy it at a discount. And if you're looking at flipping houses, you want to sell it up here or here or here. You sell it up here, you bank the money, you let the market come down and correct to an extreme low, and then you buy something else. You buy another house. That's how I want you to look at financial markets in general. It doesn't matter if it's cryptocurrency, futures, forex, stocks, it doesn't matter. You buy low and you sell high.